Hello guys, welcome back to my YouTube channel. In today's video is gonna be a moving average crossover strategy, yeah? So what I was gonna talk about those moving average strategy, yeah? Basically that's not a strategy. To me, the moving average is more like a confluence. So basically you can rely only on the moving average, like when the price comes back to the moving average, you're just taking blindly buys or sells. It doesn't really matter, it depends on which way. But what you can do instead is just to take the moving average crossover, yeah, like on your own strategy. Just implement the moving averages to to a strategy. So if, for example, I got two ways to implement this strategy. Yeah, one thing, if you're more as a swing trader, yeah, you can get the 200 EMA, and you can get the 200 EMA, and then the 50 moving average also. But on the higher time frame, yeah, on the higher time frame, usual. I'm using those two ones, the 200 and the 50. The reason why is just because the higher time frame usual continues is stronger the trend, and you can rely on that 250 moving average, yeah, on the higher time frame, like 4 hour, 1 hour, and daily, yeah. But if you are an intraday trader like me, so what I'm doing, I don't need the 200 EMAs, because what means actually the 200 EMAs, they counting the previous 200 candles. So I don't really need like the 200 candles to be counted like for example, to take a trade every single day, yeah. If I'm on the chart, yeah, I need something recent for the recent price action. I don't need something what happened yesterday or before yesterday, because I'm taking to the trades today. Yeah. So which EMAs I'm using? I'm using the 8 and the 50. Those two ones, it works perfectly with my strategy. I don't know how about other people, but me personally, I do really like the 50 and EMA cross. Yeah, so basically all the time when I'm expecting a trade, yeah, what I'm looking for example, like I'm gonna trade out of this zone, yeah. So obviously, if right now this price action was gonna go down, yeah, it's gonna happen the crossover, and if it's gonna retrace, yeah, most likely on this particular trade, the crossover is gonna be somewhere here already, yeah. So it won't be such a good trade only because the crossover is here, yeah, the EMAs are right here, and but the entry is up here. So basically, that would make me a signal to don't get into a trade with the like 1%. I'm gonna risk less than usual because it won't be the trade that strong. So I'm gonna enter, for example, like 0.5% on this trade only because the crossover is here, yeah. But if, for example, like how it happened yesterday, yeah, on the Euro USD, yeah, the Euro USD yesterday played out perfectly, yeah. You can check my yesterday's analysis, yeah. That was the low of the how is it called, of the London, yeah. So basically yesterday what happened, yeah, yesterday I took a trade here, and look how perfectly everything lined up, yeah. Yeah, here was it wasn't the crossover, but the thing is it was going to the downtrend. So basically the 8 EMAs was underneath and the 50 it was above, yeah. And was funny because, I mean, not funny, it's interesting, yeah, because the actual 50 EMA, it was like literally my zone. So I'm looking for sells, obviously. That indicates me like a very beautiful trade setup, yeah. So I took this trade, and unfortunately it went faked up, yeah, and it gave me the reaction, but still break above this. So obviously, then which trade I took this trade, and you can see, guys, I I post that on my Telegram channel also. I provide this stuff, yeah. So watch how this beautifully played out right here, yeah. So it went break up above this zone, yeah. Came back to retest, and look how perfectly everything lined up. You went crossover, you went retest of this zone, and plus it was in the zone, and both even moving average was on the zone. Beautiful pin bar, how you can see, beautiful pin bar, beautiful retracement with the rejection, yeah. We can see here beautifully breaked this previous candle, literally right here, yeah, with this candle. So look, confluence number one, yeah, it's gonna be retest of our zone. Confluence number two, it was a weak rejection, yeah. Confluence number three, crossover. Confluence number four, break of previous candle. So we go like 4 confluences, everything lined up here, and I just took the trade, simple, and I took these highs, the London highs, and everything beautifully played out. It's 2.42, you see. So basically that's kind of the moving strategy, crossover moving strategy that I'm using. I'm not using it itself like blindly, wherever here is a cross, here is a cross, here is a cross. You can see those crosses everywhere, yeah. But you can't trade like that. You have to have like an edge in the market, like a strategy, and then you can just implement these moving averages as a confluences. So to me that is the best setup. Like when I'm seeing this stuff, when everything lines up into my zone, I'm I'm comfortable to risk like 1%. I'm very comfortable to risk 1%, because if it goes down, then there's nothing else why should I look for sells here? Why? If everything shows me that it wants to go up, so I got 4 confluences and I just going up. So I just enter a trade and it went up. And obviously it won't be all the time the same results, but at least you get like the odds in your favor. So that's what I do. I try to get the odds in my favor and just placing a trade and to make the money. So yeah, guys, that's my moving average strategy, crossover. So you can, if you find this valuable, please like this video, comment down below, and we'll see you guys in the next topic. Have a great and wonderful trading week. See you in the next video. Cheers.